We've talked a fair amount about the World Cup in our show over the past couple of months, but rarely have we ever discussed the actual teams. With us today is Eran Peleg, Chief Investment Officer at Correlated Capital, to discuss the link between World Cup victory and financial and economic success. Mr. Peleg, thanks for joining us.
Hi.
So what exactly is this link between the World Cup and market success?
So frankly, I mean, the link historically has been very, very weak.
Okay.
And
I was misinformed.
Yes,
Go on.
so maybe it's a bit disappointing, but the reality is that, links are very weak. And in this tournament specifically, if anything, we're probably seeing a negative correlation between, success on the field
it's also
and, where we currently see opportunities in global equity markets.
Right. Do tell. So what exactly is this link then, or this lack of correlation?
So I'll give a few examples, prominent examples. I mean, if you think about South America, for example, South American teams have been doing very well in this tournament. We actually, in our advice to our global clients, we've actually advised people in recent years to underweight or avoid South American stock markets, as growth momentum in the region in general, but you can take an example, Brazil maybe even specifically, has really been weakening over the last couple of years. Growth, for example, is halved, according to the International Monetary Fund, from around 6% in the region just 3 years ago to around 2-3% today. And a lot of these countries being exporters of commodities have really suffered as commodity prices have been falling.
I mean, this is also obviously related to the crisis, which, I mean, during the crisis, a lot of these countries are doing a lot better, right? I mean, like in the wake of the crisis, essentially now, we see that these emerging markets are losing their appeal. Is that a fact?
It's true. Yeah, I mean, these countries are definitely in a different cycle from the developed markets, which have undergone the financial crisis in 2008 much more severely.
Okay, well, sticking with the World Cup, because that's what we're really talking about here. If we go to Europe, which is really, where the majority of the teams come from, does that play also for Europe within Europe as well?
Europe is very interesting. I mean, in recent years on the economic and financial side, we've seen this big difference between the core European countries, so Germany and France and Netherlands and Belgium, for example, and the periphery of Europe, Spain, Italy, Portugal, and Greece, for example.
Which have done much more poorly, obviously.
Exactly. They've really been hit by a big financial crisis, actually later on, mainly in 2011, which is kind of a lagged response also to the 2008 crisis.
Yeah.
And there also on the field, we're seeing a big difference. We're actually seeing the core countries, which are in better economic shape generally, performing well. Germany, and you've seen France. And on the other hand, maybe the biggest disappointments in this tournament have been, in the periphery countries. Spain, obviously, who lost, and Italy, which hasn't been doing very well. Portugal, another example. That said, I would say that in terms of opportunities in equity markets, we probably see the periphery countries as more interesting than the core countries. It's true the core countries are in better shape, but equity prices in the periphery stock markets are much lower, and we are seeing a real financial improvement there, which has really been driving equity prices much higher in periphery countries.
Based on what you're saying, I would say then essentially, these countries that are actually financially much stronger, somehow maybe there's more of a correlation in that sense. The stronger economic countries, so to speak, the stronger stock markets, they're more successful in the World Cup. Is that true?
So it's true that in terms of economic shape, definitely, or financial situation, definitely there is that correlation. But in terms of opportunities investing in stock markets, the periphery markets have been more interesting. For example, the Spanish market, even though obviously Spain has been in, seen much more trouble than Germany, the Spanish stock market's up 14-15% this year, while Germany is only up maybe 1 or 2%.
Right. Okay.
So, another example might be Japan, for example. Japan, in terms of its, it's never been a big force in soccer, obviously. And in this cup, I mean, we're seeing more of the same in that respect. But the Japanese equity market is probably the most interesting stock markets in our view currently. Growth in Japan has been really moving up, and also the growth dynamics have also improved, moving from more export-driven growth to domestically led growth. just recently we've seen an upgrade to Q1 growth numbers in Japan, up to 6.7% annualized, which is very high in a global context. But also what's very encouraging is that a lot of that has been on a real surge in capital spending, which we think will continue to support the economy.
Eran Peleg from Clarity Capital. It sounds to me like maybe Abenomics needs to be applied also to the World Cup, and then maybe Japan will do better. Thank you very much for joining us.
Thank you.